Ladies and gentlemen, good day and welcome to the Q3 and 9 months FY22 earnings conference call of Salzer Electronics Limited. This conference call may contain forward-looking statements about the company, which are based on the beliefs, opinions, and expectations of the company as on date of this call. These statements are not guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Rajesh Doraiswamy, Joint Managing Director, Salzer Electronics Limited. Thank you, and over to you, sir.
Thank you very much. Good afternoon, everyone, and thank you all for joining us today to discuss the unaudited financial performance for the third quarter and 9 months ended December 31st, 2021. It's always a pleasure to speak to you all again this quarter. I hope you all are happy, safe, and well. I have with me here today Mr. Bhaskar Subramaniam, Director of Corporate Affairs and Company Secretary, Mr. Murugesh, Assistant Company Secretary, and Bridge IR, our Investor Relations team. We have shared our results update presentation, and I hope you all must have received it and gone through the same. Before we discuss the financial performance, I would like to share some recent developments and market scenario with you. As you all know, Salzer is a capital goods engineering company manufacturing a wide array of customized electrical equipments with a strong focus on technology and innovation. We have 5 manufacturing facilities and a strong R&D team wherein we are constantly looking to innovate new and efficient products, which has resulted in nearly 85% of our components being made in-house in Coimbatore. Despite the COVID-19 pandemic, we have started to see recovery in demand from various sectors that we cater to. Even though a large part of the first quarter of the current fiscal year went into lockdown, our team has been working hard and are in constant engagement with our clients and tracking the changing situation at various levels. During the end of the first quarter onwards, operations gradually resumed to full capacity as the restrictions were eased in a staggered manner by authorities. However, as we have demonstrated during the previous year, even in such trying times, Salzer continues to show resilience and registered a good performance. On a more upbeat note, as you might be aware, we have recently forayed into electric vehicles vertical in line with one of our growth strategies of adding new products and entering new and promising business verticals. In a nutshell, in July 2021, we entered into 2 joint ventures, one with an Austrian company, Costart, and another with Indo-Austrian startup, eMarch LLP. Through our JV with Costart, we'll be manufacturing DC fast chargers for EVs and related equipment and software. Costart is a specialist in DC charging stations and equipments and is a renowned brand across Europe. With their technical know-how, we shall be manufacturing EV chargers for the Indian and the Southeast Asian markets. Through our JV with eMarch, we will be manufacturing electric conversion kits for auto rickshaws now and for buses in future. We foresee a definitive shift in the automotive industry towards EVs, especially in public transport. The joint ventures have already been incorporated and necessary procedures are on track. Operations in both JVs is expected to begin very soon. Coming to our existing product portfolio, the domestic dealer and retail market is recovering well post-COVID, which especially reflects in our switchgear business, where we are witnessing robust demand. We are optimistic that the demand for these products will continue to gain momentum in the coming quarters. Actually, in fact, almost all our switchgear segment have had a volume growth by about 20%. As forecasted, prices of raw materials such as copper, plastics, steel, etc. continued to be volatile through this quarter. We are gradually passing on this price hike to the customers. In some of our product lines, we have already increased prices. However, the margins have been impacted to some extent due to the lag in passing on the price. The lag in passing the price hike this quarter was mainly due to the competitive reasons. However, for the full year, we should see our EBITDA margins increasing by about 1 to 2%. Our export markets have also recovered very well, with significant demand coming in as the impacts of pandemic subside slowly in the global markets. Export demand is likely to be stable and positive in the near future. As the industry reopens fully, our growing export market will complement the domestic market to help us grow at a faster rate. The near-term market situation is still a little uncertain as the third wave subsides, but based on the demand we are witnessing today and indications from various OEMs and customers, we are optimistic for the medium term and definitely optimistic about profitable growth in the long term. Though Q4 might be somewhat stable, we expect very good growth in volumes in the coming year. The company is well positioned to cater a higher demand from our customers and poised to take up new opportunities. Now coming to our quarterly financial and business performance. During the third quarter, our revenues increased by 24.28% year-on-year to 211.82 crores from 170.44 crore in the previous corresponding period. Growth was on account of rise in key businesses, mainly due to very good order inflow across sectors for all switchgear products, especially wire harness. The EBITDA for the quarter stood at rupees 17.68 crores as compared to rupees 17.28 crore in the corresponding previous period, which is a year-on-year growth of 2.34%. The EBITDA margin stood at 8.35%, which is a decline of 179 basis points, mainly due to raw material price continuing to increase, coupled with very high freight costs. However, company is gradually passing on the price increase to the end customers. The profit after tax is at rupees 7.25 crore in Q3 FY22 as against rupees 6.4 crores in Q3 FY21, which is a year-on-year growth of 13.21%. Now coming to 9 months results. 9 months ended December 2021, the revenues increased 33.58% year-on-year to rupees 555.61 crore, driven by strong demand for industrial switchgear products, particularly wire harness. EBITDA, excluding other income, stood at rupees 50.9 crore in 9 months FY22 as against rupees 45.62 crore in 9 months FY21, which is a year-on-year growth of 11.57%. 9 months FY22 EBITDA margin is at 9.16%, which is a year-on-year decrease of 180 basis points, mainly again on account of volatile raw material prices and in other costs. Profit after tax stood at rupees 18.67 crore in 9 months FY22 as against rupees 13.68 crore in 9 months FY21, which is a year-on-year growth of 36.49%. Now moving on to the breakup of revenues as per the business divisions. The industrial switchgear division contributed 49.55% to the total revenues in this quarter and 51.12% during 9 months. Switchgear division's EBITDA margin stood at 10.0523 and 11.38% for 9 months FY22. All products grew in this quarter, particularly the new products, wire harness and three-phase transformers, grew at 92% and 40% respectively year-on-year. The wire and cable division contributed 43.62% to our revenues this quarter and 42.6% during 9 months. There is a decline of 3.2% year-on-year in this division during the quarter. This division's EBITDA margin has been steady at 7.3% in Q3 FY22 and 7.63% for 9 months. Building products division has contributed 6.83% in this quarter and 6.22% in 9 months. At rupees 14.43 crore for Q3 FY22, the division has grown by 59% year-on-year in Q3 FY22. The EBITDA margin for this division stood at 2.98%. On export front, despite slight headwinds due to lockdowns, we are seeing steady growth, especially from US, Middle East, Africa, and European markets. Exports to Americas grew at 61% year-on-year in this quarter. Exports to Middle East and Africa also grew at 143% year-on-year, which was mainly due to the low base last year. Exports to Europe grew at 81% year-on-year in this quarter. For this quarter, the export share of the revenue was 22%. On behalf of the company, I thank all the stakeholders of Salzer Electronics for their continued support and faith in our company, and wish all of you a very good health. This is all from our side right now. I would once again like to thank everyone for your time and attention. We can now open the forum for questions.
Thank you very much, sir. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Zaki Nasser, an individual investor. Please go ahead.
Hello.
Yes, sir. Good afternoon.
Mr. Rajesh, congrats on a decent set of numbers for Q3. Sir, going forward, I think this year we could, do you think we could end nearing the 800 crore top line? And going forward next year, would it be within striking distance of the 1,000 crore thing, sir? And I think the last quarter, last Concall, we had discussed about the promoters increasing their holding in the company, sir. What is the status on that, Mr. Rajesh? And could you briefly give us a overview of how your EV foray is going, sir, going forward? Are you looking at any other products also? Because I think there's an endless need for EV infra. Thank you.
Thank you, sir. Thank you for your encouragement. On your first question, I think we will end up, in my opinion, between 750, 760 crores in this year is what I would say, because Q4 normally is a good quarter, but since Q2 and Q3 has been a good quarters for us, we expect the Q4 might be a little stable like Q3. So we're definitely not going near 800, but as we said in the beginning of the year, we might end up at 720 was what we projected earlier, but we might end up at...
This is consolidated we are talking of, sir?
No, standalone.
Standalone, okay.
Standalone. Consolidated, yes, I think we will be close to 780, 790, yeah. And your other question about the EVs, I think technology absorption is happening right now. People are trying to build the prototypes and test the prototypes in-house. And once in-house testing is over, I think we have to go for external testing. So only when this is complete, I think we will be ready for the market. So in our opinion, I think this might take at least another six months before we are ready with product for sale in the market. So that's the status on the EV. On the promoters front, I think there's definitely a plan underway to increase the stake, and you will hear something soon.
Thanks, sir. And Mr. Rajesh, if you could just give us understanding of see, EV is happening from several fronts. Would there in India, do you think there is already a standards authority on maybe the chargers or the wires or whatever? I mean, because several people are doing it, we don't know how it will pan out. So because you are sitting in the center of the entire thing, so could you give us how these standards will pan out and what will happen on that front, sir?
No, I think there's already an organization for automotive testing in Pune. I think it's called AREA. So all the conversion kits has to be tested there, and I think for chargers also there is BS standard. So we have to do the product as per BS standard and again test it with AREA. Okay. So there are very specific standards already available.
Okay. And one last question, sir, if I may add. What is your outlook on the debt, Mr. Rajesh? Would it be around the current levels, or could we see a slight decrease in it?
Either it will be at the current level or I would see a slight increase because I think our growth for next year will be much higher in my opinion. So if as you said, if next year we want to be very close to 1,000 crore is what we are planning. So if that is going to happen, it will be at least a 25% growth from the current levels. So if it can stay at this level, that's what our target is. If not, it will be a slight increase, I would say.
Thanks a lot, and best wishes for the balance of the year. Thank you.
Thank you. The next question is from the line of Amit, an individual investor. Please go ahead.
Hi, this is Amit. Thanks for the opportunity. Mr. Rajesh, I think congratulations first of all for the good set of numbers, especially in terms of growth.
Mr. Amit, so sorry to interrupt. Your voice is breaking up in between.
Is it any better now, or otherwise I'll?
Yes,
it's better now.
Okay. Thank you. So, Mr. Rajesh, I think thanks and congratulations for the good set of numbers to you and the whole team. So I think my questions are again on the same lines which my previous person asked, the fellow person asked. One is if you can share the the roadmap in terms of EV. So how are you planning to go into the market in terms of the charger? Will it be like some kind of a lease operating model, or will it be a sell and move out kind of a model? And what's the roadmap for the next few years, let's say 23 and 24? So what are we targeting? If you can share that, that's one. Second, I think, sir, my concern has been onto the debt levels. So I understand there's growth coming in, and next again you're saying the debt either can be maintained at the same level or it can grow up. What are your thoughts in terms of reducing the interest cost? Are you also evaluating other options in terms of optimizing the working capital instead of just taking more debt? So any thoughts on that line, sir?
On the EV, the chargers, I think the whole business is actually evolving across the country right now. So there are multiple opportunities or multiple ways that you can approach the market. I think our idea is to manufacture chargers, sell it to customers who are willing to buy and install them, either in a private parking lots or there are the government tenders coming in. So that's one area of business that we're targeting. But there will be also other business that will happen is the lease model, as you said. Either we lease the equipment, or there are companies like Tata Power, for example, I think is the most prominent player in the country today, who are buying chargers and then they are installing it at their cost, and they are doing the service. So I think we target those companies is our idea. But going forward, I think maybe 2-3 years down the line, we will see whether we can do the servicing business ourselves. So, but then that's the last step that we will be taking. So that's how this business is evolving at this moment. But we have to watch to see how this can evolve in future. So we are ready to cater to whatever kind of demand from wherever it is coming to. But the main point is, I think we have to have a Indian-made charger at a reasonable cost from India. I think that's our first aim right now. One. Second, on the debt levels, yes, I think what we are trying to do is we are trying to optimize the working capital. Unfortunately, that's happening slowly. So our target has been to reduce the net working capital levels to less than 150, 140 days. However, that's still at around 160 days as of now. Hopefully, by end of this year, I think we will slightly come down, and we are trying to optimize this. But as you know, like last 1.5 years, due to this pandemic, there has been a lot of turbulence across the markets in terms of price of materials, availability of raw materials, and also a threat of third wave coming in. So we had to be ready to face all these things. So we had to order materials upfront, stock a little bit. So all this turbulence actually has made us a little bit inefficient. So we are coming back to it, and I'm hopeful that we will become a very efficient company where our net working capital days will come below 140 days. I think that's the target that we have, and we will be able to do that.
Okay, that's good to know, sir. Just one follow-up question on the first part in terms of EV. So, are there any government tenders also now or in the pipeline that the government is for the EV chargers? Or is it all
we had some tenders coming in from the Delhi government and Maharashtra government for small quantities, and we have a dedicated company under EESL. The company called EESL has promoted a subsidiary called CESL, which is, I think, fully dedicated for the EV infra development. So they have been coming on and off with tenders.
Okay.
And we expect that a lot of state governments will start coming out with tenders because the state governments have to promote this. Unless they promote it, I don't think this will really come up in a fast way. So the support from government will definitely be there, and we expect various state governments to come out with some tenders.
Correct. Yeah, I think I totally agree. So unless the government, give a first step, I think it becomes a little difficult for the private players to come in and, invest that much initially. Okay. So do you think, by the time all these state tenders start coming in and, in the bigger volumes, our products will be ready to market?
Yes.
Are there any targets in place?
I think for the chargers, we want to be ready with an Indian-made charger in 6 months from now.
Okay. All right. I think that's it from my side, sir. Thank you, and all the best for the future.
Thank you.
Thank you. A reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. The next question is from the line of Neha Jain, an individual investor. Please go ahead.
Hello.
Hello.
Good afternoon, sir, and congratulations on the good set of numbers. I have some follow-up questions related to EV itself.
Mm-hmm.
So how much is the capex that the company is planning to invest? And will our existing capacity be enough? Are we planning to do any capex over there for manufacturing plant?
Both JVs, Salzer will be holding to start with at 26% stake in both the JVs. And Salzer's investment into the JV, for the chargers, it will be 4 crores, and for the conversion kit manufacturing unit, it will be 2 crores. So overall investment at 26% right now is 6 crores is the commitment that we have made right now. Going forward, if further investment is required, then we will increase our stake and invest further. But right now it is 6 crores. And in Salzer, I think there's no major capex planned as of now. So it's just the regular maintenance capex that we are doing, which this year will end up at around 11-12 crores.
Okay. So, sir, could you share some future projections in terms of revenue or returns that can be generated from this business? And by when do we...
On the EV, on the charger business?
Right, yeah.
The charger business, I think we are looking at 3 years. In 3 years, we want to make at least 2,000 chargers, 200 chargers a month is what we are looking at, which will be close to, in my opinion, the revenues will be close to around 100-150 crores. So that's what we are targeting, but that's too pessimistic in my opinion because the demand can be much more. But right now, this is the capacity that we are planning.
Okay. So 200 chargers a month, right?
Yes.
So about 150 crores a month revenue that can be generated. Am I correct?
A year, I think.
A year. Okay, fine. And do we have any existing players, like any competition in the market for the same?
Competition, of course, in chargers we have companies like Delta. We have even ABB making it, and there are a lot of imported chargers available in India.
Okay, fine. And so with the real estate segment, so now that there's some recovery in that segment, are we targeting any new clients for the same, or are we continuing with the old clients? And how do we see the next few quarters in the segment?
In the real estate business, right?
Yeah.
Building segment
Yeah.
business.
Yeah. Building segment,
Actually,
yes.
building segment business, we are seeing a very good uptick in business. Every quarter we used to do around 9-10 crores, but I think in this year, starting Q2, we have been doing around 14-15 crores every quarter, which is quite good, and we expect that this growth will continue faster. And as well, the way that we are growing is with supplying to existing clients, as well as we are trying to garner new clients, new builders. And on the recovery front, I think it's been much better than what it was in the beginning of the year.
Okay. So, sir, do we have any targeted revenue in mind? How much do we target in the next couple of years from this segment?
This year, we will end up, in my opinion, we will end up 50 crores of revenue in this segment compared to last year's 32. Next year, we are looking at 100 crores in this segment.
Okay. Thanks, sir. And sir, next
Ms.
comment.
Jain, ma'am, sorry to interrupt, but for any follow-up questions, may we request you to rejoin the queue, please. We have other participants waiting for their turn.
Thanks.
Thank you. The next question is from the line of Krishna Kumar from Lion Hill Capital. Please go ahead.
Good afternoon, sir, and congratulations on a good performance during tough times in terms of inflation. Sir, just want to understand on the wire segment, wire and cable. We used to also do enamel copper wires, etc. So we have the capability. So when you look at the electric vehicles and the need for more motors and copper winding, so do we have a play there? Would we be able to supply insulated or enameled copper wires for motor, EV motors, etc.? Can you share some thoughts on that, sir?
Yes, I think definitely that's a new market that will be coming our way. We do produce enamel wire, and we have the capability to produce enamel wires. We are already supplying our enamel wires to automotive companies like IFB Auto and a couple of other auto motor manufacturers in the country. Right now, the business volumes are too small, but I am sure that this new EV push will bring in additional growth in that segment, and we are capable of supplying enamel wires to that business.
So any capacity that you can talk about, sir, like in terms of are we, do we need to add the capacity for those products? Are they different, the normal motor winding, or can you share some color on that?
Right now, our capacity for enamel wires manufacturing is 200 tons a month, but we are producing close to 160 right now. So we still have some room, but once the real demand comes in, maybe we should start adding a few more machines and increase the capacity.
Fine, sir. Fine. Is there any need for additional technology, sir, or we are kind of
not required? It is already that technology. We have the capability to produce that wires.
Okay, sir. So second question, in terms of the EV conversion kits, can you give some perspective there in terms of when you would be launching the products, etc.? I probably missed your initial comment on that. If you can.
Conversion kits, I think we are doing the trials with auto rickshaws right now. We have already converted a couple of auto rickshaws, and our people are doing the trial in-house, and we have also given it for field trial. So we are just waiting for the feedback. Once things settle down and we improve on the product, I think we will have to go to ARAI testing. We have to submit the product for them for testing. And once the testing is complete, then we should be ready for the market. So again, from my opinion, I think it will be a 6-month timeline for the product to be ready.
Okay, sir. So here again, both in the EV charger and the three-wheeler kit, what kind of branding will do so? It's going to be a Salzer product, or will it be rebranded as something else?
We will be branding it jointly with our partners also. So we will use their names as well as Salzer name.
Okay. Okay.
It'll be joint branded product.
Okay. And what will be the kind of market opportunity, sir, for the three-wheeler kit, sir, and what kind of realization roughly you can look at, sir, basically?
Sir, I think as per our survey, what we did, there are 10 crore auto rickshaws that's running in the country, which are sold in the last 10 years. So if you calculate, if you go back a little bit, take last 15 years, there are more number of autos still. So I think that's the size of the market. But then it's not easy to go and capture this business across the country in such a quick time. So our idea is to go state by state, use the automotive spare part dealers as our channel, and also the workshops as our channel, and sell these kits. So here again, we estimate the realization price will be approximately 1 to 1.2 lakhs per kit. We originally wanted to sell this around 75,000, but because of the cost of the battery and the motor, I think the cost of the kit is increasing. So it will be around between 1 and 1.2 lakhs will be the cost of the kit.
Okay.
So to start with, I think in the second year, we should be able to get a market of around 90 to 120 crores is what we are estimating.
Sure, sir. So, just look at the feasibility. You have new electric vehicle three-wheelers that are being launched by various players at slightly higher prices than what you are now talking about conversion. So Mahindra Alpha comes at 1.5 lakhs or somewhere there, and some other companies also have launched products. So for a new product, with government subsidy, etc., you probably are getting it very close to what is the kit price you're talking about for an old vehicle. So do you think such a market exists, sir, in terms of potentially would we be impacted by by decision to go for a fresh vehicle than to retrofit, sir?
Sir, it's a good point. I think as soon as Mahindra announced this, I was also a little bit worried, so I went and checked the specs. What is the vehicle that they are giving at 1.5 lakhs? I think there's a lot of difference between Mahindra's 1.5 lakh new electric vehicle and the conversion kit that we're doing. One is the range, second is the payload. I think the payload that Mahindra truck, the new electric vehicle is giving, is only 300 kilos payload, and at a max speed of 30 kilometers per hour. So this is, I think that vehicle is only for a very specific use. It can't be taken out for normal use or normal transportation. One. Secondly, what we are trying to do is we are trying to convert the existing petrol diesel auto rickshaws. So a existing owner of a petrol diesel auto rickshaw, it is better for him to convert than sell this and buy a new electric vehicle. New electric auto with the same capacity, with 500 kg payload and a max speed of 60 or 70 kilometers per hour will definitely cost more. And also the range. I think we are promising a range of 120 kilometers in one charge with a max speed of around 70 kilometers per hour. And the payload is the same as the existing petrol autos. So there's a wide difference between this auto rickshaw that you are talking about and the conversion kit. So I'm confident that this will definitely be marketable in the market.
Mm-hmm. Sure, sir. The last point, sir.
Mr. Kumar, so sorry to interrupt, but for any follow-up, may we request you to rejoin the queue, please? Thank you. The next question is from the line of Sanjay Awadramani from Envision Capital. Please go ahead.
Yeah. Good afternoon, sir. Thank you for giving me this opportunity. Sir, I just wanted to ask you can you highlight a color on this margins front from EV side and the overall margin of this business we are running right now?
I think the conversion kit margin, we expect this to be anywhere between 20 and 25% on EBITDA levels.
Okay.
On the charger front, I think it should be around 17 to 20% is what we expect. To start with, it may be a little lower, but it can go up between 17 and 20% on the chargers at the EBITDA level. This is our estimation as of now.
Okay. And the rest of the business, switchgears and all the consolidated part?
If you see, I think this quarter, I think we have dropped down to 8.5%. 9 months it's around 9%. I think once the main reason that this quarter has dropped is because of very huge freight cost that has come in, which we are unable to pass on. Otherwise, I think we would have been at normal 10% EBITDA levels, which I expect will come back in Q4. So going forward, I think 11% is a figure that we should expect on EBITDA.
Okay, so 11 expecting in Q4, sir?
In Q4, we will be back to 10%.
Okay, so 11% will be from Q1 FY23. Okay, sir, that will be great. Thank you so much, and that's all from my side.
Thank you. The next question is from the line of Archit Singhal from New York Investment. Please go ahead.
Yeah, hi. Thanks for giving the opportunity. So a few questions. Firstly, you mentioned for next year you're targeting a 25% growth. So, I mean, I'm just trying to understand what is driving this kind of a growth, because the industry is not going at that rate, right? And if you can also split the growth between the two verticals, cables and wires and switchgears, please.
I think the revenue share so far in this 9 months, the industrial switchgear is at around 51, and the wire and cable is at 43. The building segment is around 6%. This is the revenue share that has been in this 9 months, and we think that this revenue share will continue for this year also at 51 and 42 between the two top segments. Going forward for next year, I think the wire and cable can grow a little bit because this year the wire and cable market has been very subdued because of the very high copper prices. The market has been very slow, and that's one of the reasons we are also not able to grow in that segment. So FY23, I think it will be at 48 and 44% share between industrial switchgear and wire and cable. That's what I expect. And on the growth front, why we are growing is because we look at the industrial switchgear business. Our normal business per quarter used to be around 70 crores. Between 60, 70, 75 crores is what we were doing until FY21. So right now we are seeing a business of close to around 105 crores in a quarter starting this Q2 FY22. The main reason for this growth is because of the new clients that we have been working on for the last 1.5 years, and also the addition of new products in the last 2 years, like the wire harness and the 3-phase transformers. So these additional business and also the new clients that we have been pursuing has given us this growth in this year, and we expect that the coming year also, whatever we are working on now with the clients will all translate into business, and that's why that we expect kind of 20-25% growth for next year in the switchgear business.
Understood. And sir, 2 more questions. One, what is the sustainable margin for this business? I mean, obviously margins currently are lower because of RM inflation, but let's say towards the end of FY23 or 24, what can be the sustainable margins which we can achieve?
I think our switchgear margins used to be between 15 and 17% in FY21. FY21 we closed at 15% EBITDA in switchgear business. But I think going back to 15% might be a little difficult because there's also some inflated cost. So that we can't expect the EBITDA margin to rise or continue to be at that level. But currently it is around 11.5%. We can expect the stable margins to be anywhere between 13 and 15%.
Understood. And last one, what? Sorry?
For FY23, I'm talking about.
Sure. And last one, sir, what are the measures which we are taking to reduce the working capital?
I think there are only 2 things that we will have to do: collect quickly and reduce the inventory. I think these are the 2 things that's under our control, which we are trying to do. Reducing the inventory and wherever possible, we are discounting with the customers' facilities, and These are two things that we're doing.
So this 140-day working capital, that is for the next year, which you are giving the target.
Yes,
right?
sir. Yes, sir.
Oh, okay. Okay, that's it from mine. Thank you.
Yeah.
Thank you. The next question is from the line of Chirag Patel, an individual investor. Please go ahead.
Hello, sir. I have a few questions with regards to our new product development and also the government push for the EV-related infra which they announced in the budget. Like there was a battery sweeping policy they announced. So there is one company called Infinity which is into two-wheeler scooters. They offer such product. So how our charger will get benefited out of such product offering? And also going forward, the government also planning at massive level with the municipality to install publicly available this charging infra. So how we are placed to take the advantage of this tailwind?
There are two types of chargers that will come into play. One is the AC chargers for the two-wheelers, and other one is the DC chargers for the four-wheelers. Because two-wheelers, the charging, you don't need a very powerful charger. It can charge quickly even in an AC charger. So the battery swapping again, I think, will happen only for two or three-wheelers at the max. I don't think battery swapping is a possibility for cars because of the size of the battery and the weight of the battery. So maximum it can happen for the two-wheelers. So where the chargers can come into play is all the battery swapping stations has to use multiple AC and DC chargers. So that's a market that we have to address to. And on the DC chargers, as I already told in this call earlier, as and when the government starts pushing the EV infra, I think they will start buying a lot of EV chargers, mostly, in my opinion, DC chargers, and that's what we are making, and we should be able to be one of the first players for DC chargers in India.
Okay. So my second question is regarding particularly you gave like 10 crore auto rickshaws has been sold in last 10 years, and so these are majority sold by like guys like Bajaj and this TVS. So do we have any plan to tie up with them for OEM related business opportunity, or even for service related tie up for the existing to cater to the existing vehicle which are on road?
Majority of the auto rickshaws, I think 65% market share is with Bajaj in currently in the country today. And the second, I think, is Piaggio and TVS comes second. So but the 65% auto rickshaws are Bajaj. For conversion kits, we are not planning to tie up with the OEMs. I don't think that's a possibility because OEMs won't be interested to take a conversion kit, but their business is to sell their product. So I don't think that's a possibility. But on the other front, I think we are talking to various two-wheeler electric vehicle OEMs to supply wire harness and also motor controllers. So these are the two products that we have that we can sell to the electric two-wheelers manufacturers.
So, sir, just as an entrepreneur, how you see your revenue going to be reported after 5 years down the line? Let's say there will be a separate division for this renewable and EV segment, or will it be clubbed together with normal revenue?
We actually already floated an 100% subsidiary for the electric vehicle business. So I think all the electric vehicle business will come under the subsidiary and get consolidated in the main company.
Okay, sir. Thank you. Best of luck.
Thank you. The next question is from the line of Anirudh from Nagova Capital. Please go ahead.
Hi, I had some clarification. Now, in your business, like from whatever I understand, can be broadly categorized into domestic OEMs, export OEMs, domestic dealer business, and export dealer business. So, assuming these are the four categories, how is the your price pass on to your customers, how much are you able to pass on to these 4 customers? Like, is it easier to pass on to export and less to domestic? Is it easier to pass it on to OEMs and less to dealers? Just a broad understanding I wanted.
Passing on the price increase, whether domestic or export, it is difficult because nobody wants a price increase at any point of time.
The propensity to absorb where is I'm asking.
No, I think the beginning of the year and end of last year, I think we were able to pass on. I think people agreed, accepted quickly, and we were able to pass on. But in the last 6 months, I think people have been tired because we have done like 2-3 price increases, and most of the customers are little frustrated. Of course, all of us are frustrated because of this, but they're not ready to quickly take a decision and then give a price increase. And also there is competitive pressure now because we have done 2-3 increases. Now to do another 3-4% increase, there is always a pressure. The last increase.
Right.
In my opinion, I think. Export, it is difficult to increase compared to the domestic OEMs.
Okay. Is that because, generally the margins are higher or the competitive intensity is far higher there?
No,
or
I think
the price longevity is higher?
The export OEMs normally don't see an inflation. They don't see an inflation, they don't give a price increase normally.
Right.
Only India, we have an inflation and we go for price increase every year. But the export markets, very, very difficult to ask for a price increase every year. So we always do a once in 2 years, once in 3 years price increase for export market. But then, realization in export market is much better than the domestic market.
Okay. So in that case, if your export business keeps growing and the raw material also keeps, price pressure sustains, so that may not necessarily immediately translate into higher margins as we see. Is my understanding correct? The lag will be far higher than in the domestic market increase.
If the raw material price continues to increase, then yes, what you say is correct. But in my opinion, I think the raw material prices more or less stabilized. Even the freight costs have more or less stabilized.
I understand.
So we hope, I think things from here on will be better.
Okay. Right. My next question is, this is just an understanding. Now, this whole wire harness business is, the revenue recognition is considered under the switchgear business or in the wires business? Like this is
switchgear business.
So the wire is only just basic wire, like that you sell is considered as wire business, correct?
Correct.
Okay. And
the wire harness, we do a lot of value addition.
I understand. So I just this understanding
will be between 60 and 70% of the wire harness.
Understood. Okay. Now this.
Mr. Anirudh, so sorry to interrupt, but for any follow-up, may we request you to rejoin the queue, please. The next question is from the line of Prashant from Inventress Securities. Please go ahead.
Hello.
Prashant, your line is in talk mode. Please proceed with your question.
Hello.
As there is no response from the current participant, we move to the next question from the line of Rohit from Progressive Shares. Please go ahead.
Hi, sir. 2 questions. First is related to the freight. Which of the 2 are we following? Are we following CIF or FOB?
We have both. We have on the export front, we have both CIF. Sometimes we also do DAP. We also deliver duty unpaid. So all kinds of contracts are there. Mainly the freight cost increase is because of the ocean freight as well as the domestic freight road transport price increase.
So how do we decide if we wish to go with CIF or FOB or DAP then?
It depends on the client. Some clients want us to deliver the duty paid actually. Some clients are FOB. Some of them even take ex-works.
Okay.
So it depends on the client and their connections in India with their freight forwarders. If they have good connection, they use their freight forwarders. Otherwise, they ask us to deliver.
Okay. Second question is related to KC. if you can take us through the development and any directional growth that you would like to share for KC, because KC's top line is increasing, but on the same line as what Salzer is doing, the margins are taking a slight a bit of a dip of 100, 200 BPS. So any directional growth for KC for the next year or times to come, if you've been able to solve the puzzle and show the growth path for KC?
Actually, KC's growth this year has been quite good. So far, I think in 9 months, the company has grown by around 26% on the top line, and also the bottom line has almost tripled, I would say, close to that. Mainly because maybe last year was a low base, but even otherwise, I think we are seeing growth coming in. This year we will end up doing around 28, 29 crores compared to 23 last year. Our plan for KC for next year is to do 50 crores with the existing products that KC has. So if that happens, then I think from there on we will see a lot of upward momentum.
No new products planned for KC, is it?
Right now, no. We are not adding any new products, but we are cross-selling a lot of Salzer products in KC. KC brand and through KC dealers.
Okay, sir. Thank you. Thanks a lot.
Thank you. The next question is a follow-up from the line of Anirudh from Nagoba Capital. Please go ahead.
Hi. Thanks for the chance. Now, in the EV segment, what are the backward integration possibilities? Like wound components is one thing, PCB assembly is another thing. So, what are the synergies that you're trying to bring? In terms of wire harness is another thing. So, just broadly, if you can give me an idea about what are the forward integrations that are possible.
I think it's a good point. I think we have also been thinking on these lines. On the conversion kits, I think we are using a lot of our wire harness. I think that's the only backward integration or a product that we have that can go into the conversion kits.
So the motor winding wire, nothing as of now.
No, we have the winding wire, but we don't make the motor. So maybe we are buying the motor, so we can ask our seller to use our wire. So that's a possibility, but that kind of product insistence can happen only when we have decent volumes.
Right.
On the chargers, I think we have more backward integration products. I think a lot of electrical switch gears that go into the chargers, like contactors, circuit breakers. We have switches coming in, again wire harness coming in. So there are a lot of switchgear components that we manufacture that goes into a charger. So that's something that we are looking at, and we're estimating. I think as of now, I think close to around 15 to 20% of the cost of the DC charger will be the products that Salzer makes.
Right. So magnetics is not something that you are very strong with as we speak right now.
No, actually, magnetics is I think three-phase transformer is a part of magnetics for us.
Right.
We also make single-phase transformer, which is a part of the switchgear business. So all this is coupled under the switchgear business, and magnetics is one of the products under switchgear, along with wire harness, that is growing quite fast.
Okay. And the other thing, what is the the closure time that you are seeing in the building segment, because it had slowed down drastically the last 2 odd years. So has it increased the pace in terms of the people completing their project? Just generally asking.
I think in the last 2 quarters things have definitely picked up quite fast, I would say. I think a lot of people are rushing to complete projects. And I think another negative that I see is it is not happening across the country. I think it is happening in selective cities. Mostly I think class B and B class cities is happening faster. I think cities like Bangalore, Chennai, the major cities are still slow.
Still slow. Okay.
Yes, still slow.
Okay.
I think one exception is Hyderabad. Hyderabad is going quite fast. We are only present in the south 5 states, so I can only comment about these 5 southern states.
And the inquiries are looking very strong as we speak, correct?
Yes. There are a lot of new
the
projects
conversion
coming
from inquiry to order and the order to execution is where I think the delay lies, is what you are trying to tell, correct?
Yes, I think that there was a delay. FY 2021 was very slow. I think after Q2, things have definitely changed and picked up very well.
Understood. And the pricing power in this particular segment, is it there or is it still very tough right now?
Actually, this product is high gross margin product, in my opinion. So if we get to the critical level or sale value, then we will see 13-14% EBITDA levels in this product.
So operational efficiency, once it kicks in, the margins will keep expanding.
Correct.
Okay. Thank you so much. That's all.
Thank you. Ladies and gentlemen, as there are no further questions, I now hand the conference over to Mr. Rajesh Doraiswamy for his closing comments. Over to you, sir.
So thank you all once again. I think it's been very interesting questions, and happy to answer you always. Looking forward to interact with you again next quarter. Thank you.
Thank you. Ladies and gentlemen, on behalf of Salzer Electronics Limited, that concludes this conference. We thank you all for joining us, and you may now disconnect your lines.